Hey, good morning, everyone. Raj, good morning. Ben, hey, Kevin. Well, my friends, we made it to Friday. Hey, Crypto Savvy from the T Dot. What's going on? How is Toronto? Hope it's warming up. Oh, man. It has been a week, ladies and gentlemen. It has been a week. Whew. Just taking a look at our TPO chart. TPO chart is just a fancy way of saying a market profile chart. And you can see that we are inside that range from 2 days ago. There is a thin spot in the market profile, basically from 51 to around here, and we've been filling that out yesterday. We did not fill the single prints. Now, a lot of people who aren't familiar with market profile are not familiar with the concept of single prints. And single prints are a concept that show in these distributions. It shows where people are trapped, um, short or long. Now, when the market goes up, it'll show you where the shorts are trapped. And the shorts are trapped right now, 51.45 to 50.98. That was the low of yesterday. The overnight low shows that, of course, unfortunately, people do get short in different time frames. And so going into the close, you see a lot of people will short the low thinking we're going to get lower. And then when the market starts moving higher, and then we adjusted inventory here in M period, but we couldn't break that 52.27. That's really where the next short position is. So short position 1 is here, short position 2 is there. Now, why is it important to know where the shorts are? Well, because that's where the buying is. You see? If you know where the buying is, that's half the battle because that's where you know where the sellers are going to stop selling, right? It's really simple, but never talked about. Okay? Where the buying is where the sellers stop selling. Now, that really doesn't make sense when you first think about it. it it's not obvious, but if you had product, right? Say if you had 10,000 ES contracts or 5,000 ES contracts, and the market sold down to a level, and then all of a sudden you see a big buyer, right? You see a really big buyer. What are you going to do? You're going to raise price so that buyer follows you and chases prices higher, right? Because that's how you do business, right? Otherwise, if you have all those contracts, 5K, 10K, whatever the case may be, you want to get as much for them as you can. And because everybody who's a size trader is trained the same way, you see on Wall Street, there's only one way to do things. It's always funny. I always have people who go, "Oh, your trading style is this. Your trading style is that." I don't have a trading style. I just trade the way the business works. You guys have trading styles. You're either a fib trader or an EMA trader or a wave trader or a whatever trader, right? I trade inventory and order flow. Hey, good morning from Port Jeff. How is beautiful Port Jeff? I miss New York. Good times. So, our partner Steve in the room is from Port Jeff. And my old best friend who passed away was from Miller Place. So, that I used to do lots of deals in that Port Jeff Miller Place area. I miss it a lot. So, we have overnight inventory was short, and now it's correcting upward. Okay? In every market, especially at night, no kidding, there are a lot of characters in Port Jeff. And I've done business with a lot of them. The low of each candle, half hour candle, that's where the stops are. And you can see that the shorts, there's number one, there's number two, and then three, four, five, six, seven, eight. That's why when the market goes down, you're going to have responsive buying at those areas, right? This is tactical intelligence you can use to actually trade and actually make money from and manage risk. I know, I got to focus now. I got to focus. By Friday, I got to tell you folks, I'm a little worn out by Friday. I'm old now. Been doing this 33 years. So let's see now. We're backfilling, right? We take the market up to create demand, and now we go back and we fill in that demand with supply. And that's what we're doing right now. I'm just trying to find the overnight point of control thing. These ranges are just insanely too big. And it's just crazy. So there's the point of control from yesterday. Oh no, that's 2 days ago. There's the overnight point of control. So we had good distribution up here at 53.66, and now we're going back and we're filling in that short position. So we're going to see where the large buyers are. Because as soon as the large buyers come into the market, the sellers you see how they're creeping away from that area, that 53.48. Yeah, Fridays was good for profit taking in the old days. So I had a balance zone that I did up from 52.97 to 53.16. Once again, the balance zones are larger because the ranges are larger. Usually 6 weeks ago, 8 weeks ago, our balance zones were sometimes 3, 5, maybe 6 points. Now they're 20 points. And what I was doing to get that balance zone was I look for highs and lows. And when we hit that low, you go back to the middle, you go underneath that low, you go right back to the high, and then you take that and you double it. If you actually go and draw a volume profile, I'll do that later, you'll see that there's a chunk of volume right there. And then we use that to manage our trades. So this is 2 times profit, right? So this is your cost basis. This is 2 times profit, and this is 4 times profit. Why are the ranges larger now? Well, my friend, because the market kind of went on a bit of an acid trip, didn't it? So what happens is market makers and large traders who usually provide the shock absorbers to keep the market ranges smaller, they have to spread their risk out over much wider ranges. Also because of electronic trading has caused the market reaction times to be milliseconds instead of minutes. So the market reacts to a large order in milliseconds. So if you drop a big buy order, all the sell orders disappear. If you drop a big sell order, all the big buyers just drop instantly lower. That creates bigger ranges. Think of trading capital like peanut butter and think of these ranges like a huge piece of bread, right? You've got one spoon, you got to spread it real thin, right? People only have so much capital to work with, so they have to spread it over a wider range, right? These markets are very thin. And what do I mean by thin? If you look at the order book in the ES right now, in the E-mini, you'll see that it's 3, 4, 5, 6 contract aside. Some places you have 20 contracts, but that disappears as soon as you get to it. So this market's like, I don't know how old you are, Jonathan, but it's like driving an old 1976 F-150 with no shocks. I do not trade breakouts. Jerry, good morning. The reason why I don't trade breakouts is because as a size trader, I have been taught to sell into a breakout. So if I was long, let me show you, right? So here's the top of that balance zone, right? Here's the top of that balance zone. If I was long product here and it broke out, I would be selling into it up here, like all the way up. And then I'd sell it down, and we're probably going to come back down to this area here. And we actually didn't, right? I've been trained to sell into a breakout, not buy it. That's why the ES trades like a penny stock. So we just had a look below and fail of 53.53. Hey, Phil. Let's see if we can get up to that 53. Now, the other thing that we do, I'm sorry I'm a little slow this morning. Breakouts are exactly how you exit size. Exactly. Right? That's the Port Jeff way. Right? We sell into strength. So the sell orders, they started here, right? We were selling product to people up here, and then the sellers started to compete, so they lowered price. We looked below 53.54 and failed, came back up, but we knew that there was going to be a seller here. So had you gone long 54, you're probably going to be getting out at 58.59 because you know that there's a seller, right? Yeah, smart money sells into a breakout, not shorts. Not shorting, sells product into a breakout because the breakout creates buying. When a market breaks out, what it does is it takes people's stops. And if you're short and you have your stop, that creates buying. And then people chase price, and that is a perfect opportunity to sell them all your goods because you've created buying. It's beautiful. So that's why retail chases breakouts, and then they go, oh, it was a false breakout. Yeah, it was actually, we were, the breakout was there to sell you product. Hey, Phil. Yeah. So that's why, people talk about liquidity. A breakout will create liquidity. A breakout to the upside will create liquidity for people to sell size into, right? You got to get rid of your product, right? You've got to get rid of it. You need to get rid of that product. And if you have size, like 2,000 contracts, it's a perfect opportunity to turn those 2,000 contracts into cash. When it breaks out lower and it takes out a lower stop, sellers just start piling out, right? They have their sell stop, right? So if you took, say if everybody had their stop here and you took that low, a bunch of people are going to sell. So short sellers just can sit there and cover, right? And they'll just sit there and cover as the sellers dump into it. Now let's see what goes on. So we've got sellers at 53.60. Last time we came down here to 53.47, we found the bid. Let's see if we just rotate in here for a bit. Hey, Youngian, that's just because of order flow. Market makers don't do anything on purpose. They need the order flow to do it. Market making is very misunderstood, and there's a lot of rumors about market making that are quite false. They're just there to provide liquidity. Everything's automated now. So what you're seeing large position traders hit those levels, and they blame it on market makers. Well, let's see if we can take out that 60 seller. So say if you were long 55, right, with a 53 stop, I would sell a few here at 59, 58. 53.72? No. No, John. The look above and fail for you is only at the edge of a range, not in the middle. Well, this is a tough one. This green candle is tough because you're going to enter here, shark, and you're going to have to sell here. Here you could get a better entry, right? So that makes this more difficult to trade when it's choppy around. You want to get a nice clean move, right? So now we've cleaned out that seller. Where's the next seller going to be? Up here in the 65 area. Yeah, you can use this on equities. You can use this on any any instrument that has order flow, right? And is a market. So, Julian, you're asking where's the perfect entry here? And that's kind of tough, especially with a range this big, right? Sure, in a perfect world, this is the perfect entry. Here you're going to get stopped out. And I'll admit, if I was taking this trade, here I would have missed it. Here I would have taken it and maybe gotten a point or two, right? And by the time this setup actually happens, I might have actually traded and stopped myself out a couple of times. Like, if we're being honest, right? It's always easy to say in hindsight, oh, I would have taken it here, I would have exited here, right? But in a choppy market, when you first start trading, your first trades of the day, the odds are pretty good that you're going to screw up and make some mistakes. So the more chop and the seller being there makes it more aggressive. I mean, not aggressive, difficult. Sorry, I was reading somebody else's post. Yes, market makers react. So let's come down to that 53.46 and see if we can fill these single prints. Right? This is a short position from 53.31 to 46. And notice as soon as we start coming down to this area, the market starts lifting higher. Right? As soon as we come down here, you saw it lift away. See? A lot of people, when they're doing the look below and fail, they'll take it and get stopped out and they'll say it doesn't work. What helps is to know where the seller is going to be when you do take the look below and fail. Because if it does this like this and you have to buy high, your margin of profit is not that much. If you get a better entry, right, your margin is better. So if you're long now, say you do it, say you're long, if you were able, ugh, Jesus, right? And see, this is exactly what I'm talking about, right? I was just thinking, oh, if you were long at 56, you could put some sell orders here, but we didn't even get to the top of that candle. So that chop makes it difficult to trade. And when it's difficult to trade, you have to realize that and trade less. Because what's going on is the large traders are working out this level. And when they're working that level out, it makes it difficult for a retail trader to actually get a clear shot. Right? And that's frustrating, right? It's frustrating. Now, if you were shorting, if you were doing the look above and fail, right? Look above and fail of 54 and you're short, say you're short 52, stop 54, you know that there's buying here because the single prints are shorts, which equals buying, right? So there's a chop zone here that you can get easily chopped up in. That's why we stay away from those barcodes. The barcodes here are pretty big, and they do look tradable until you get in there, right? Would that be the top of red candles on a 30-minute candle chart, knowing we're possible? Yes, definitely, John. Right? On longer time frames, you should see some selling at the top of a 30-minute candle. See how it comes down to that 46? Now, when the short sellers who are bid to cover there at 46, if they see supply, if they see a lot of selling, they're going to drop their bids down to 44. If they run out of supply, they'll push the market up because they're going to try and that's very hard to trade that. So this is kind of a no trade zone for me right now. Hey Howard, can you Oh yeah, yeah, sure, no problem. See how we're starting to fill those single prints? but it's hard to trade because it's like, eh, 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 right? That's what you want to stay away from. Until the market gives you a clear setup. And in this market, because the order book is really thin and the order book reacts very quickly to large orders, it's like dropping a big rock into a small puddle of water, right? It's not easy to trade this. So say if you were going long here, right? Say you jump the gun and you go, what are margins like tonight? See, I haven't even checked my emails. Anybody know? That's the first thing that we should check. Bad discipline on my part, ladies and gentlemen. And nobody in the room can answer me. Bad discipline on their part. Here we go. 100%, right? So overnight margins are 100%. So it costs 2 grand to trade a micro and $20,000 to trade one mini, right? You should have that information at the tips of your fingers. Okay? No margins on Ninja? What, you don't need any money to trade? Or is it just like regular $50 margin? Really? Okay. Well, they're rolling. Man, if I owned a brokerage firm, I'd charge you guys 200% margin. You want to trade a mini, it's 40 grand. uh, but it's a thin line between trying to get business and protecting your firm, right? So right now we've got a seller here at 57.58. So if you're long, we've got to push past 58, right? See how there's a seller. As soon as we get up to that 57 level, they come and whack it, right? So if you are trading, right, this whole week has been about admitting you're wrong quickly, okay? So if you had bought 55 and it starts offering under 54, get out, right? You have to build your instincts. And a lot of people, right? A lot of people will email me and go, my trades aren't working. And I'm like, have you kind of looked at the market in the last week? Right? You like when you look at your candle chart, like that, do you think this is normal? Controlled selling, the controlled selling occurs to find the buyers. It's the same thing. And we're always distributing, Jungian. We're always distributing. Right? Sometimes we're distributing at a healthy profit. Sometimes we have to distribute at a loss, but that's business, right? We're always distributing. The market is about distribution. Nobody really understands that. You'll ask people, why does the market exist? And they're like, oh, to make money. For you or the people who are selling you stuff? Who's selling me stuff? Like, if you don't realize that someone's selling you something and you're in a market, you better go look up the definition of a market. Know what I mean? Right? And that's the thing about what we teach at in our room at Microefutures. We teach you how to have some common sense. right? The sellers control the market. They product is created and sold according to the people who come in, the customers. So if a lot of customers come in, Youngin, you can raise price. If no customers come in, you have to put the product on sale. Just like Walmart, just like Kmart, just like Best Buy, right? Like you bought something in a store, right? You've been to a market. Now here comes London. Let's see what they've got. It's the same thing. The chart that you are watching right now is basically a sales chart. It tells you about the sales and distribution of ES. On the left side is the sales and distribution on a 1 minute time frame. On the right side of the screen is sales and distribution on a half-hour time frame. So you can see that the sellers have lowered price and they will sell that 58, 57. Now let's see if they've lowered price underneath 53. So if prices are lowered under 53, then you want to look to short and put your stop above 54, right? And look to cover around 45, 46, right? If the market lifts above the top of that candle, you're in trouble. Get the hell out of your short, right? Simple, 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 right? So if you were short 52, you put your stop here and you buy some back here. If you've got a larger account, you put some bids down here at 40. But that's into those single prints, and you know there's going to be buying there. So you want to front run that and cover. Make sense? The trade has to make business sense. If the trade does not make business sense, there's no reason to take the trade. That's why this concept of FOMO and YOLO, that's just the most lazy mental crap I have ever heard in my life, right? Nobody does FOMO brain surgery, right? Nobody does, hey, let's YOLO, you know, let's YOLO brain surgery. Like, that sounds just ridiculous. Why would you do that with your hard-earned money, right? It's stupid. It's just stupidity. And we've made it acceptable, right? It's ridiculous. There's going to be a seller at 50, right? So we found some buying here because the sellers stopped selling, right? There's a little cost basis here, and we sold right down to that cost basis. You're offended? Sometimes the truth hurts, man. Right? You know, there's a saying, snap out of it. My job is to keep you from losing money. It's like, you're offended? Okay. Do you still have your trading account intact? Then I've done my job. Right? As long as you remember, that's all that matters, right? When you're in the heat of battle, you have to remember the common sense stuff. Otherwise, you in a market like this, you're just going to get eaten alive. You're going to get eaten alive. See, there's that. You could the top of these candles when they start. You don't want to go long when you see that there's a seller right there, right? There's a huge difference between promoters and wholesalers. No, 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 no. Okay, a wholesaler is a market maker, right? And they have an agreement with the exchange to provide liquidity. A promoter is someone Say I have 150 million shares of a stock. I will hire someone and I'll say, listen, I'll give you $100,000 if you can bring in $500,000 of buying. Go and find me some stupid people to buy this stock and I'll pay you. That's what a promoter is. Get it? So if you were shorting and you see sellers constantly at that level, you can stay short. Does that make sense? Promoters, they're just promoting an investment idea and they're getting paid to promote it by the people who own the smart money, right? Like, and there's all sorts of different types of promotion. Like large companies, when they take their companies public, they will use social media. They'll go on CNBC. They'll do everything to drum up demand for the stock, right? Almost filled these single prints, ladies and gentlemen. It's a two-sided market. There is going to be some selling. So we filled all of those single prints except 2 points. So if you were shorting, right, John, this is that look above and fail, right? But it's choppy. As soon as the market couldn't get back over 54, you start shorting the 52s, the 51s, and if the offer keeps going lower, you can stay short. I don't know what they're doing right now in these conditions. In conditions like this, Youngian, companies don't think about trying to make money. You guys, what you have to understand is if you own a business, do you focus on short-term profits and take massive risk? Or do you think about survival and keeping your capital and not blowing your firm up? Does that make sense? There was a company like Citadel back, I don't know, 20 years ago called Knight Capital, right? And during the flash crash, they lost $400 million and blew up their firm because of, I don't know what the hell they were doing, right? So retail traders are always worried about how much money do you make? How much money do you make? How much money do you make? If you run a business, you're worried about, am I going to be here tomorrow? Yeah, there's no reason to short a market if there's no supply. That's why you got to short the back end, right? You short the back end of the move. You don't short this. You short this, and you wait until here. You short the back end of the move once the sellers show themselves. Here, the sellers are not showing themselves. Yeah, you have to play defense. So we corrected inventory up, right? Higher prices brought in sellers. And I'll be looking for 53.16. I don't know anything about the Indian markets. Gosh. All I know is don't short the front side of the move. Right? And let me tell you guys something. and ladies, big money is not made from shorting. Okay, shorting is very sexy on TV and in movies and stuff like that. But big money is made from getting a ton of cheap crap and selling it at a higher price. Okay? He who has the lowest cost basis on size is the one who makes all the money. Right? That's why smart investors, smart money, what they do is if a stock's trading at $3, they'll finance the company, right? They'll give the company a couple of $1 million so they can do their business operations. The company will give them stock at 40% of discount, right? Mike, you're confusing me. Post in one room. You're posting all over the place. Right? Thank you. Right? Shorting is they try and make shorting glamorous. It's it's not glamorous when you're getting bought in, right? How these people make 300, $400 million in a week is by selling large amounts, copious amounts of stock into buying, right? Go take a look. Just look at the market movers, right? Go look at some of these stocks that trade like, you know, there's a stock that'll trade like a dollar at a dollar. It'll trade 113,000 trades and it'll trade $60 million worth of stock. So while somebody has sold 20 to 30 million dollars worth of stock into that buying. That's how you have a 20, 30, 50, 100, 200 million dollar day, right? That's how big money is made from distribution. It's not made from shorting 20,000 shares of a stock, right? I'm still waiting for 16 and a quarter. So if you were short up here, you want to be covering, right? Before you come back to your cost basis, right? That's a nice short. Even if you were short 48, 44, right? If you were shorting up here, these ranges are huge. See? Now, why did I say that? Because I saw that the market couldn't get back down to 16. Look at this. So if you hadn't covered, say you were short 48 and you didn't cover down in the 24, 28 level, now it's eating into your profits, right? I don't even have VWAP right now. Can anybody tell me where VWAP is? Thanks, Jonathan. So this is the smart money coming in and short covering right here, right? So they're short. This is where they're covering. You should cover too before it takes up all your profits. 52.97. Thank you. Ah, it's the bottom of balance. The U.S. markets, I mean, with the exception of the last couple of weeks, have been structured to do nothing but go up. They limit supply, they lower interest rates so you can buy, they use the stock as collateral. That's why everything fell apart when our friend in the White House went and changed economic policy, right? All the collateral, you know, you don't buy a billion shares of Apple and just let it sit. It's used as collateral for other things, right? The collateral, when the collateral starts going down, margin calls start happening, and then you have to sell, and that causes more selling, which causes more selling. Now let's see what happens over the next couple of weeks. Interesting times, that's for sure. Right? So, because margins are elevated and raised, you know, you want to trade less, trade smaller. Maybe they'll change the margin situation. Some firms obviously don't have margin issues. Like, I think Seymour was saying that there is no margin increase at NinjaTrader. Right? Yeah, that's right. Dodd-Frank. TradeStation margins up. Man, I haven't used TradeStation. I think I had TradeStation back in 2000. It's been so long. Oh yeah, AMP is 2 grand a micro and 20,000 for a mini. But you got to remember that like AMP is purely full retail shop, right? Full retail, and 99% of the traders that are trading in those full retail discount shops really don't have any risk management. So they've got to really pull in the sales. Right. So now this is chop, you know, and we're waiting for the next order of business. This way, I don't like to trade in the middle of the zones. Some people elect to, but I like to do the look below and fail or the look above and fail. And this short I missed fully this morning. I've got to say, being quite truthful and honest with you folks, I'm a little burnt out from this week, and I'm also packing because we're moving, so my trading has not been on point at all. Um, I don't like to trade when I'm distracted. I don't like, especially in a market like this, because if you lose focus for just like a couple of seconds, you can be down quite a bit of money. Um, you can make really bad mistakes. So I might be. Don't know yet. Um, so we'll find out. I don't want to, but I might have to. So It's a bit disruptive, and that's the thing. I'm not sure yet, Moran. Maybe Plymouth. We'll see. We'll see. I wish. No, not down the street. All the way down south. I remember once when I moved my mom out of her house and moved her into an apartment with me. It. I took 3 weeks off trading to move, and when I came back, I was trading so well before, and when I came back, I was trading horribly. It took me like 3, 4 weeks to get back into the swing of things. My timing was off. I was missing trades. I was stepping on my feet. You know, I was talking to somebody yesterday and they were like, "Hey, I'm a little stressed out." I'm like, "Don't trade if you're stressed out. Not in this market." You know, be very selective of when you put your capital at risk. That's what I'm trying to say. Like this, I'm not touching this, right? And I got to really say, do I want to trade on a Friday? Now, this is just I'm not that I'm telling you guys not to trade, okay? Please don't take it that way. I'm just saying for myself, I'm tired. I'm moving. I'm not really on the ball. Do I really want to trade and pay $20,000 to trade one mini? Eh. Will I be doing another Market 101 session? Yeah, if there's demand for it. Sure, right? I do not trade the news at all. That's for suckers. No, market makers don't trade like we do. LOL, LOL maker. They provide liquidity. It's a completely different business. It's a completely different business. Yeah, I don't trade the news at all. That's for suckers. I like nice, boring rotation. You know what I like? I like when the market does a nice, boring rotation, like here or here. What I love is when the market has a nice range and we just kind of do this, right? Nice and boring. I don't like drama. If I want drama, I'll go watch something on TV. I just want to make my money and not have a heart attack. You know what I mean? Um, that's just the way I've been trained, right? Just quietly make your money and don't go banging on about it. A little bit of a slower night tonight. There'll be some good trades later on. Hopefully they lower margins. Might have to use the other account. Any other questions? If you've made money this week, your job is to hold on to it today. Okay? If you've made money this week, your job is to hang on to that money and get it the hell out of your brokerage account so you don't do anything stupid. Okay? Every Friday, you should be withdrawing money from your brokerage account. Right? If you haven't made money this week, don't try and do it today. That's the majority of traders blow up their accounts on Fridays because they're pushing it because they're desperate. Always remember, a desperate trader is a dead trader. Okay? It's almost like the market can sense your desperation and will just suck all the money out of your account. Mikey, you're just all over the place this morning. Oh, God. You need to go for a run. It's 29,000. They're still letting you borrow money, John. Remember, John, when you're trading futures, you're trading with the money of the brokerage firm. So they figure 29 grand or 20 grand, sorry, $20,000 to trade a mini, right? Yeah, so what happens is, oh, that's a good question, Jonathan. Sorry, I'm a little tired this morning. So when a market liquidates, right? The first people to come in and buy are the short sellers who are covering. So that's the smart money shorts. Then wholesale will build a position on top of that. But if there are sellers here, they'll buy here and sell here. That's why you get that balance box, right? If the order flow comes in, we can take this product and go sell it up here. If the order flow doesn't come in, the wholesalers will have worked that box enough that they don't mind that this happens. Hopefully that they can trade it back and forth. That's a big enough sideways range, right? Yeah, so John, they usually like at these discount firms, they let you trade put down $400 for an E-mini contract, right? But there's not a lot of margin of error with $400. You'll blow through that within a New York second, right? So they figure, okay, 20 grand, right? We'll give these guys a bigger margin of error, 20 grand. If they really want to play, then we'll take 20 grand off of them. So now I'm looking for 53.16 right here. It's good, Dave. Go enjoy your Friday night, brother. Let's see what happens when we hit the 16 quarter. See? They stopped selling and started raising price. See that? Soon as we came to 16 quarter, they stopped selling and started raising price. So if you're a trader on the ball under normal margin conditions, you go buy 17, put your stop under 16 quarter, sell 25. That's the fail to look below. You trade from the outside edge in, like I just showed you, RC. Good morning. So I told you guys to look for 16, right? Like I've been saying it for the whole hour. So as we came down to 16, if you were fast, you buy 17, 18, put your stop under 16 quarter, maybe 16, 15 and 3 quarters, put your sell orders at 24, 25, and as the market goes up, you get taken out. That's it. There's a perfect example of us watching a level and they stopped selling when we got to the level. Why? Because that's where they bought the stuff. They bought it under 16, so they're going to sell it down to 16 and they're going to stop selling. See what I mean? It's very simple. Very simple. I'll talk to you about that later, John. That's the exchange sets the margin rates. So that's their current margin rate. So that's what 100% is. That trade is a fail to look below, Luke. Right? A look below and fail is if the market had looked below 16 and a quarter and come back up. In this case, what happened was the market failed to take out 16 and a quarter. So you go long, you put your stop there, and you sell into this strength. And that's it, ladies and gentlemen. That's what we teach you at Microefutures. Come by and say hello. We've got a 7-day free trial. And I promise you you'll learn more in this room in 7 days than you will anywhere else in years. I can guarantee it. Thanks, everyone. Be safe out there. And if I don't see you in the RTH session at 9 Eastern Time, have a wonderful weekend. Hey, John, there you are. Thank you very much. We will see you later, folks. Have a wonderful weekend.